Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our banner story. The House of Representatives is open to banking industry's proposal to include a so-called safe harbor provision in the amendments to the bank secrecy law. Committee on Banks and Financial Intermediaries Chairman Quirino Representative Juni Kua said the request by the Bankers Association of the Philippines, or BAP, is well taken and could be inserted in the bill to ease concerns of the industry. Kua said the banking industry will also be part in crafting the measures implementing rules and regulations. The BAP wants a provision that will shield banks from lawsuits or civil liabilities in relation to deposits examined by the Bangko Sentral. Now, under House Bill 8634, the Bangko Central's supervisory powers to examine deposits will be extended to foreign currency deposits in banks that have Philippine operations, as well as the foreign units of domestic lenders. Results of the examination will be available to the Bangko Sentral, the SEC, the Philippine Deposit Insurance Corporation, Anti-Money Laundering Council, the Department of Justice, and the courts. The bank secrecy law was passed in 1955. Okay, guys, kicking off the market report, checking in on Wall Street overnight. You can see on my terminal here a bit of a mixed picture with the Nasdaq down by 0.5%, but the S&P 500 up by 0.1% together with Dow Jones. Now, recall that this comes amid some comments from U.S. Federal Reserve Chair Jerome Powell. He actually reassured investors that more stimulus was coming, and he also voiced expectations for a return to more normal and improved activity later this year. He did mention that the higher bond yields reflected economic optimism, not inflation fears, and traders say that this helped fuel a return of the buy the dip mentality. Now, let's take a quick peek at how Asia is opening this morning, not necessarily in step with how Wall Street performed. You can see Japan opening on the back foot, the Nikkei 225 sliding by 0.4%. The Topix as well down by 0.7%. So let's let markets percolate over in Asia. Now let's take a quick peek at how we are opening this morning. First minute of trade, so to speak. Recall that yesterday we had ended in the green, but that was really just because of some bargain hunting that did ensue, and you could see that U-shaped graph here on my charts. It does not appear to be the case that we were rebounding earlier in the trading day. We are still down by 0.2%, still hovering at 6,800 levels. Now, this, according to Luis Limlingan of Regina Cap, the good thing that we saw was that investors did return to the Philippines. In particular, the net foreign selling was a bit less than the average we've seen in the past few days. And he did mention that there was bargain hunting happening after we saw successive sell-offs after the recent economic data showed just a slightly better labor market. Now, one thing that I wanted to focus on is the mining and oil counter, in particular the miners of minerals. This as the Mines and Geosciences Bureau, or the MGB, mentioned that last year the improved nickel volumes was actually, or metals output in general, was up by 1.3% in value. So that's actually 132 billion pesos worth of metals output last year, driven particularly by nickel ore. So nickel ore was 52% of all of those production, followed by gold 36% and copper 11.2%. Now, the MGB also said that nickel benefited from the rise in metal prices due to the supply disruptions, and still there is strong demand from the stainless steel industry in China. You can see here how our nickel miners are opening this morning, down by 0.6%, save for PXP Energy, which is up by 0.3%. The rest are actually feeling a bit of a pinch. Nevertheless, the MGB did mention that the outlook for the minerals industry in 2021 remains uncertain, of course, due to the pandemic, which has disrupted mining operations. And just one thing that I wanted to check in on today is Ayala Land, and that, of course, is on a trading halt this morning. That's from 9:30 until 10:30 a.m. today. This just in, they are going to be raising up to 41 billion pesos via retail bonds and a loan. So they are filing new 50 billion pesos worth of bonds, shelf registration with the SEC, and these are intended to refinance their outstanding loans and corporate requirements. Recall that yesterday we had reported that the board of Ayala Land approved a merger with its unit Cebu Holdings. Again, we're going to be watching out for that. Watch out for the market close later on when the trading halt is lifted. Now, here to chat with us about these developments and more, we have with us First Metro Investments Tina Ulang. Good morning, Tina, and welcome back.
Hi, good morning, Danie. Hi, nice to be here. Thanks for having me.
Thanks so much for being on the show, Tina. Let's kick off with the general sentiment. The latest strands here, the vaccine delays, of course, when everybody was already excited for this MGCQ to possibly be happening on March 1. Does this matter pa ba, reopening the economy even further? Because what we have seen is that even when the economy was reopened slowly, the consumption was still not there.
Mm-hmm. I think the biggest challenge would really be the restoration of the previous economic vibrancy, and then of course, the unemployment rate has to go down and go back to normalcy. But that's not going to happen. We're still suffering from the health crisis, and that is really the key, the vaccination, so that we can prevent especially now we have this UK variant, and Pasay is on lockdown, several barangays. So the market is quite concerned about all of these things, but that doesn't mean that there is no upside for this market and that there is no team. I
Mm.
I am very bullish about the market, very constructive, because we will be on our path to normalcy, and the vaccines are going to arrive and it's going to be implemented, and there's no way but back to recovery. So you'll have the team really is a recovery place, and this is the time to accumulate and to invest. It's just that you have to have patience with this market, because we have our own pace in as far as the return to recovery and return to normalcy. We have our own pace. The other countries may have
Mm.
started very quickly. We have our own constraints to operate with, and that could be our budget, that could be our politics, it could be the logistics that we have. So these are the operating constraints that we face, and we have to be patient as investors. But the view is that 2022 is going to be a lot better than this year. This is a year of
Mm.
consolidation. We have to be patient.
Okay.
We've got to pick up the best stocks this year. This is the opportunity to buy.
Okay. Tina, do you feel the same way? Even as NEDA Secretary Carl Chua said that we don't need more stimulus to come into play, and actually just by reopening the economy, it should be all right. Are not market investors really betting on more stimulus to, as you mentioned, spur some action here?
Mm-mm. Of course, investors are always looking for anything that could reflate the economy. There is this thing such as a reflationary trade, and that's been very popular in the US because Biden has this $2 trillion worth of fiscal
Correct.
stimulus. We don't have that here. It's just being pushed in Congress for 120 billion. But that is one thing that's really exciting the market if it comes true. But of course, the economic managers are always concerned about fiscal sustainability. We cannot just spend because the virus is going to be like here a lot longer than we would want it to be, and so they're trying to be very conservative with the finances, and we have to keep our triple B rating. That triple B rating plus, and that gives us access to foreign financing, which is
Mhm.
very much needed now because we don't have the tax revenues as robustly as before, and that is key really to sustaining the economy, the funding, and so the cautiousness on the part of the economic managers. Of course, the markets is
Mhm.
always looking for the stimulus. Where is the stimulus? It is not forthcoming. That's why there is some hesitancy, and so the consolidation of the market, the range trading, the 6,008 to 7, and it is not there seems to be no catalyst for now.
Okay, Miss Tina, now that we are of course hovering at 6,800 levels, but it's still much better than what we were trading at in terms of valuations last year. Is there where are the bargains that you're seeing? Is it just that all the big blue chips are ripe for the picking, or are there specific bargains that you can still be looking at?
Mhm. There are now two forces working in the market, and this has become a very exciting market because the retail clients are very excited about the third liners. They want to make quick bucks, and you see the volumes really being driven by them. And on the other hand, you have the insti more conservative and trying to accumulate on the more companies on the PSA, the more tradable ones, the more liquid ones, the ones with the greater, the best fundamentals, of course. So we've seen the Philippine mining sector really outperforming all others indices within the PSA, and that's really because of the commodity cycle being very robust, copper and nickel, and you see global ferronickel, Atlas, and what's the other ore, and then the of course nickel, and then
Mm-hmm.
ferronickel. So these are the issues to watch out for. It's very exciting. You may want to pick them up when they correct, and but also the Philippine commercial industrials also
Okay.
very upbeat, like your those with exposure to renewable energy, and then the utilities, and of course the dividend base, of course,
Mm-hmm.
dividend base.
Tina, what's your outlook on consumption this year? You mentioned that 2022 will be a better year, but that this year is just recovery. What about the consumption stocks like JFC, Shakey's? Is this the time to be picking them up? JFC still having
Mhm.
losses from last year, and even before COVID, had some
Mhm.
difficulties to integrate their buys.
Mm-mm. I think the JFC is trying to reinvent itself. It has its own business transformation, and I think that's very good strategy for them to be able to sustain the and look at their capex. They're very aggressive. It means they're here to stay. The brand is here and very strong brand. And when we're back to normalcy, then this is the really the brand to watch out for. And this is they're going to benefit from their own business transformation, the restructuring. So if the price correct now, and the target prices are being adjusted a bit lower because of the lower income, but it's still a bit, and you may want investors could pick this stock up at the level at the level that suits them, meaning once it corrects, and it should be very well timed. And that is the one that's exciting about this company. It's really the capex and the business transformation. So once you are able to pick this up at the right price, then you can benefit from the 2022 reopening of the economy and the
Okay,
benefits of the brand.
we still need the right price, and of course to sit on it until that recovery. What
Mhm.
about the IPOs that we're watching out for? Let's talk about Monde Nissin, and that's also a
Mhm.
sort of a consumption stock in a way,
Mhm.
and that
Mhm.
what do you compare that to, and how do you know that this stock will be performing well this year?
Well, of course, this is an issue that is multi-branded leadership position in so many brands. It's not only here, but it's also abroad. So investors would be having an exposure as far as these brands is concerned in leadership position. And of course, when the economy recovers, the employment and the consumption returns to normalcy, then these are the issues that will benefit. And hopefully the size fits the appetite of the market, and of course the possibility that this can be a part of the PSA, an integral part of the PSA, of course.
Okay, and finally, Miss Tina, before we let you go, outlook on REITs. There, it was exciting last year to even in the November period when the property space was rebounding. Now it seems to be a very mixed outlook, especially when we talk about commercial real estate. Now
Mhm.
that Double Dragon and RLC are set to list on the market, why should investors be picking that up?
Mhm. I think the major theme of the market now is really the path to normalcy, reopening play, and really the hunt for yields. We're still seeing low interest rates, low yields, and REIT is one instrument that can provide you the dividends, the steadiness and the reliability of dividends, and of course the capital injection, the property acquisitions of the REITs that we are going to be seeing in RLC if they're going to put up their own. And that is the one that's gonna help. And of course, the tax benefit, the tax exception for the OFWs, it's tax free for the for of course for the individual it's 10%, but for the corporate it's tax free again. So that adds to the yield of the REIT, the steadiness of the dividends, and then of course the fact that what goes into the REIT are really your cream of the crop properties, the ones that really are making the money. Like in the case of
Hmm.
a
Okay.
REIT, you have the Makati property being inside of it, and then some of the BPO buildings. So this is going to be the cream of the crop part broader property portfolio of and of course the service sector is going to rebound with the consumption improving over time. But we are having this election 2022, and we could be benefiting from an improved GDP. Hopefully that is the catalyst for the REIT.
Okay, very interesting here. Just a quick check on A-REIT, which is actually now trading at 34 pesos and 40 centavos. Quite a feat there from its IPO price. Thank you so much for those insights, Tina Ulang, First Metro Investments.
Sure. Thank you, Danie. Bye.
Here are the other headlines for keeping our eyes on. NEDA tells the Philippine Star that it will have to reassess the country's economic targets for the year. This after President Duterte decided to reject proposals to put the entire Philippines under MGCQ until mass vaccination has been rolled out. Socio-Economic Planning Acting Secretary Carl Kendrick Chua said they have to revisit targets amid other delays in further reopening of the economy. From the earlier 8 to 10% growth forecast, NEDA is now seeing the economy growing by 6.5 to 7.5% this year, and that is still dependent on certain factors, including an eventual shift to MGCQ, the implementation of a recovery program, and the timely COVID vaccination. But the Foundation for Economic Freedom stressed that the delay in loosening quarantine restrictions was a, quote, significant setback to economic recovery. The Power Sector Assets and Liabilities Management Corporation, or PSALM, is aiming to further bring down its debt by 6.5% this year. This means they plan to slash almost 25 billion pesos off of its 381 billion peso outstanding accountabilities. This is on top of prepaying 19 billion pesos of its existing obligations with the Treasury Bureau. To boost its revenue, the Finance Department says PSALM is looking to collect over 10 billion pesos in power sales by the end of the year. However, this is 20% lower than what it had collected in 2020. The state-run company is also planning to collect 359 million pesos from delinquent accounts and is set to sell around 950 million pesos worth of assets. The damage to agriculture caused by Tropical Depression Auring has reached 22 million pesos. That's according to the Department of Agriculture. This as over 1,700 hectares of farmland and 240 farmers were affected by TD Auring. Affected commodities include rice, corn, and high-value crops, as well as livestock and fisheries. The brunt of agricultural damage was felt by the rice sector, with losses amounting to almost 20 million pesos. Livestock damage was estimated at over 1 million pesos, involving the death of more than 1,000 animals. And that's the first look into the business day. Today is Wednesday, February 24, 2021. Catch Business World live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.